What's up YouTube, it's Sang here and I make videos on the stock market. Guys, before I get cracking, please check out that link down below. That's Trading2 on 2. Go and grab yourself a free share of stock worth up to $100. Guys, I've got a jam-packed one for you today. I got a fantastic question from a subscriber, and Emmanuel wants to know what are the best EV stocks to invest in order to diversify your portfolio in this market. So I'm going to be whipping out the charts answering that question. Also, there's breaking news from NIO. They've just announced that they're doing a share offering. So I'm going to be giving you my thoughts on that. So guys, stick around to the end of the video. It's going to be a good one. Now, without further ado, let's jump into the portfolio. So up on screen is my YouTube growth portfolio on the road to 100k, standing at £42,500. So we're up about $1,000 today, guys. This is just the power of the stock market. That's why I come on here each and every day to show you my plays, so you guys can jump in on the same, and we can get your portfolios from $1,000 to 2,000, then from 10 to 50, and then eventually from 50 to 100. Guys, we're building wealth over here. Now, the best EV companies to invest in right now to diversify your portfolios. Let's jump into the Tesla share price graph. So if Tesla isn't in your portfolio, or you have a very small position in Tesla, you should definitely start building out your position in Tesla or buying into Tesla. But with Tesla, it's all about a question of timing, when you should buy in. Now, if we jump into the share price graph, the share price movement is characterized by these massive run-ups, and then it has these big drop-offs. So as you can see inside the red circles, big run-up, then a big drop-off, right? Another big run-up, big drop off, and right now we're going through the same thing. We have a big run up, but the question is, has it dropped off enough for us to buy in? So I'm going to answer that question. So this first drop off here was about 55%, right? Pretty sizable. The second drop off here was about 35%, right? Now if we zoom in, we know that Tesla has dropped recently, but it's only dropped about 5%. Yeah, so we know that we should be expecting Tesla to drop off anywhere in the region of 15 to 50%, right? It won't drop off 50%, it'll probably drop somewhere 20-25%, right? So the Tesla share price will probably settle somewhere in the mid 500s, and then that's when we can start buying into Tesla again, building out our position before it then takes off, surpasses the 600, probably settles in the 650 region sometime next year. So that's the strategy with Tesla. So now if we move over to NIO, we know that NIO's had a massive run up to about $55. It's come down to around the $45 and it's consolidating, right? So it's just trading in a narrow channel somewhere in the region of 45 to about 42, right? So that's why some days you see NIO up, 2%, down 2%, up 2%, but it's not really breaking the resistance line that it has or dropping below its support line. So this is key because we know that Tesla has done the exact same thing a few months ago. So if you look at the Tesla share price graph, you can see after this big run up, it was just consolidating, right? Just trading in that narrow channel before it had a catalyst, boom, share price shot up. Now this is important for us to know because now is the time for us to be buying into NIO, because once that catalyst comes, that share price is going to skyrocket. Now the same thing applies to Li Auto and XPeng. So this is the Li Auto share price graph. You can see they had a massive run up, but now they're consolidating in a very narrow channel before the catalyst comes, and you'll see that share price spike. So we now can take from this that we should be buying into NIO, Li Auto and XPeng and building our positions if we haven't already built them out. So now we're switching to an EV infrastructure play with Switchback Energy, which is a SPAC that's merging with ChargePoint, right? So we know what to do with the car manufacturers, right? We know that we're waiting for Tesla to dip. We know we should be building out our positions if we haven't already in NIO, XPeng and Li Auto. But what do we do with Switchback Energy? So if we look at their share price graph, we can see that it's trading pretty high at the moment, and this has come off a dip, right? Now, the important thing to note is that dip was created by the whole EV sell-off, right? It wasn't to do with anything to do with Switchback Energy. There was no regulators involved with Switchback Energy or anything like that. This was just the whole general EV sell-off, right? Now, that EV sell-off came at the end of November, around the 26th, 27th of November. If we quickly flip back to a Li Auto, we can see that the EV sell-off plus all the regulatory intervention caused a bit of fear, and now that share price has dropped and it's not recovered just yet. But the exciting thing to note with Switchback Energy is that share price recovered within the week, right? So it recovered within a few days. This is a strong sign that you're buying into a company that is pretty damn good, right? So Switchback Energy, I like them because they're very, very fast growing. Okay, so in 2020, they're set to do about 135 million in revenue. 2026 forecasted 2 billion in revenue, right? They are the market leader in the charging stations. They have so many charging stations all over. You can actually just go to Google Maps, type in charge point, and you'll see they are everywhere. So you're investing into an asset which is the market leader and is set to grow and expand. Also, they've got very good margins, so they're going to be profitable in the near future. So check this, guys. There's two ways we can play this one. We can either buy in now around $40, expect a little bit of price fluctuation, but it should rise ahead of the merger completion before the end of this year. So you guys should be in the green and you just hold long term. This is a fantastic asset that should easily double by the end of next year. Or we wait till the merger has completed, then you'll get a bit of a sell-off and you can buy in at the dip. So if we jump into QuantumScape, we can see this is what happened with QuantumScape. So when the completion of the merger was announced, the share price actually dropped 25%, right? So it didn't take long for the share price to recover, right? QuantumScape is a very, very good business. And again, this is another business that can double by the end of next year. So that's two ways to play this one, guys. I've already built out my position in Switchback Energy. So what I'm going to be doing is the next time I buy in is when there's a sell-off, when there's a dip after the completion, and then I'll add to my portfolio. So my last two favorite EV companies to diversify your EV portfolio are in the battery space, right? So one is QuantumScape. They came out with some really, really good news a couple of days ago. I did a video on that, so go and check that out. You can see the share price has skyrocketed. Guys, this is easily a play that can double by next year. So just wait for a 5 to 10% drop off in that share price and jump in. So anywhere in the region of, if you can get under 70, that is a good steal, guys. The second one is Microvast. Now this is merging with Tuscan, which is the SPAC. Again, they also enjoyed a big run up off the back of good news from QuantumScape, right? So that's how, that's how the market works, right? When you have two similar companies operating in a similar space, when one does well, the investors pour money into the other as well. So these are two really, really good companies that if they're not on your radar, they really, really should be. Wait for a 5 to 10% drop off. Guys, these can be home runs by the end of next year. So put them on your list. So now onto the question of the day part of the video. And I've actually got this question quite a few times over the last hour, so it's definitely going to help a lot of people out. So Scott says, NIO announces a 60 million ADF sell-off causing after hours dips. What's your take on this? So thank you very much for sending in this question. So this is the big news. So NIO has followed in the footsteps of Tesla and Li Auto and Xpeng and issued more shares, right? So this is going to dilute NIO's shareholding. So yes, we have seen a drop in after hours. So if we jump in, we can see NIO is down 6.5%, down to about $42. So when you wake up in the morning, check your NIO stock. Once the market opens, it's going to be in the red. But this isn't something to worry about. This is my take on it. Yes, it has diluted the shareholding, but if NIO is going to use this extra money for purposes that's going to grow the business. So they have come out and said that they're going to spend it on R&D. They haven't given too much information other than that. So if they're going to spend it wisely on the R&D, this is going to come back to them twofold, threefold, right? So yes, they're going to spend dollars on R&D. I think specifically to do with their autonomous driving segment actually. But if they make the sales, if it adds millions and billions to their market cap in the future, that is a fantastic thing for our shareholders, right? So we just have to leave it in the hands of NIO to spend this money wisely and build the business. I want to go a little bit further. I want to go show you guys something. So when Li Auto announced that they were going to do their share offering, if we can see, the share price dropped 5%. If we now switch to Tesla, when they announced they're doing a share offering, the share price dropped 7%, right? But the next day, the very next day, it was up 3%. Next day, well, the 2 days after, up 9% in total. Now, Tesla, the next day was up 3%. So this is telling us something. We can spot a pattern here that, yes, there's a sell-off, but then very next day we have a boost in that share price. So guys, this is a fantastic buying opportunity. So I already have my NEO shareholding built out pretty well, but I'm definitely going to take advantage of this and buy in tomorrow. So that is the game plan, right? Remember, we're always thinking one step ahead. When the market is fearful, guys, we're hungry over here. Okay, so that is the strategy. Don't worry, NEO's going to use that money wisely to grow their business. So guys, thank you very much for watching the video today. Please hit a like on this video. It really helps the channel out. Guys, do light up that comment section. As always, your thoughts, your comments, your opinions, I'm reading every single one of them. And remember, check into the channel daily. The stock market is very, very fast moving and you never ever want to miss a beat. So guys, until next time, take care.